In today's episode of Across the Chain, we're going to be doing a deeper dive into the now defunct crypto hedge fund 3AC, also known as Three Arrows Capital. We're going to look at the market and its reaction to the CPI report. And then we're going to end with market news, which includes me having some pretty choice things to say about Charlie Munger, Berkshire Hathaway VP and Warren Buffett right hand man. This dude needs a reality check. In a massive game of lender Ponzi meets Russian roulette, the now defunct crypto hedge fund Three Arrows Capital has been on the run. No one knew where they were. It's been a month. They fled Singapore. Everyone's trying to find them. Why? These dudes owe some of the biggest crypto companies in the world $2.3 billion. You guys got to check this out. It is absolutely insane. Genesis, Voyager, BlockFi, Blockchain.com, FTX, BitMEX, Durbit, and I assume the list goes on. We don't know how exposed this really is. And at this point, we're only aware of $2.28 billion taken out as loans and used for what appears to be mostly Terra. Let's see how this is broken down. We've got Genesis at 200 million, Voyager at 650, BlockFi at 1 billion, Blockchain.com at 270, FTX at 75, BitMEX at 10, Durbit at 80. How is it possible that all of these companies lent 3AC this much money? This is mind-blowing. Technically, they say they were only exposed to 200 million to Terra, but I don't see them going bankrupt and losing their position on Terra, only equating to 10% of their portfolio. Of course, they were already becoming destabilized in this bear market. And then when UST became depegged and then Luna fell, it's like, wow, now one hedge fund that borrowed $2.3 billion put everything on black and they lost. And mostly to the expense of everyone else. And this is what led to this massive deleveraging event and capitulation. So for anybody that doesn't know what capitulation is, it is a finance term that describes the dramatic surge of selling pressure in a declining market or security that marks a mass surrender of investors. The resulting dramatic drop in market prices can mark the end of the decline, since those who didn't sell most likely are not going to sell. This would be your hodl crew. All right, let's get back to 3AC. 3AC co-founder Su Zhu, whose whereabouts are currently unknown, broke his month-long silence about the affair to post on social media 2 letters from his legal counsel. This was directed towards or addressed to Russell Crumpler, who is the accountant in tasked to recover the $3 billion in assets under management, or, whatever still exists. So July 8th, in a court filing, it emerged that Su and his co-founder Kyle Davies were nowhere to be found, and Crumpler feared that the two, had fled without a trace, embezzling assets belonging to the company's creditors. So much so that Crumpler sent his colleague to Singapore to meet with them and to ascertain details about the fund. And he found, and I quote, that the offices appeared vacant except for a number of inactive computer screens. Unopened mail addressed to 3AC had been pushed under the door or propped up against it, which basically is the international sign for, we have bailed and we are running for our lives. Zhu's legal counsel attempted to explain the client's disappearance, citing his clients and their families had received threats of physical violence. Look, that's not cool. And that's definitely plausible due to the harassment of the wife of Terraform CEO Do Kwon following the implosion of Terra USD. But, alright, so that makes sense. But you manage, or rather you did manage at some point about 10 billion in assets. Surely you have a staff. That's not the picture that's being, depicted here. You've gone silent for a month. Everyone's asking questions. Your office is vacant. You have no staff. This is not taking responsibility. And it's not all on 3AC. It's also on the counterparties, the people who lent them money. They shouldn't have loaned them the money. I hear about people talk about this all the time about crypto, that it's the Wild Wild West. This shit right here, this is exactly why they say that. This is the equivalent to banks offering subprime loans leading to the Great Recession in 2008, which was the housing crisis in the US. Did the investors of BlockFi know about this? Genesis, Voyager, Blockchain.com, FTX, BitMEX, Durbit. Did they know they were lending money to a company that was so over leveraged it probably couldn't get a $300 credit line from Bank of America? In the age of decentralization, in the spawn of a revolutionary technology, this just blows my mind to see that it's almost nothing that it was intended to be. It's games played by people of power, all behind closed doors. The technology exists. Blockchain is not theoretical. It's created to transparently show a decentralized ledger of transactions. The system is there. It's ready to use. I use it every day. It can show us, it can show investors that these companies are taking our money and loaning it to these 3AC jabronis. Why not operate on the chain? Why continue to mask how we are managing investor funds? This is not what blockchain was intended for, and the key reason why we need further capitulation. Capitulation shows the underbelly of crypto grifters. If you guys don't know what that term is, a grifter is someone that takes advantage of people or swindles them in some sort of fraud, usually financially. And I would say that we need to see Bitcoin go down another 20, maybe 30% to see who else is over leveraged. What other 3ACs are out there? We need these people out of crypto. They need to get out of here. They do not belong. We need to create some sort of decentralized framework on how we are going to operate finance in a decentralized world, because this isn't working. How can we create a framework of decentralized finance? Is it possible that we can get all of these companies, all of these centralized exchanges to operate transparently on the chain? What are your thoughts? Tell me about it. Leave a comment. Join our Discord. Let's talk about this. All right, let's get into the market. Okay, the CPI came out this morning, which is the Consumer Price Index. They missed the mark quite a bit. Inflation is up 9.1%, surpassing expectations. And per usual, it did have an impact on the market, but it wasn't just a couple hours that we saw, a bit of a resurgence. So if we look at Bitcoin, we can see that it is up 3.37 in the last 24 hours, although it's still down 1.15 on the week. But this is what I'll tell you about the resurgence. So you can see this is when the news dropped about the CPI, and it dropped all the way down. It dropped from just under 20,000 down to just under basically 19,000. And once it hit there, it really just for the rest of the day kind of just floated its way back up to about 20,300. And right now we're currently at 20,161. So going back to the market, we can see Ethereum is up 4.9% on the day. It's still down 5.3 on the week. BNB, who actually recently just did their buyback, their quarterly buyback from their profits, they are up 3.81% on the day, and they're down 1.91 on the week. XRP is up 2.57 on the day, down 2.32 on the week. Cardano 2.79 up this today, but they're still down 2.45% on the week. Solana is up 3.96% on the day, although they're still down 6% on the week. That takes care of the market. Let's step into some news articles where I'm going to get kind of feisty with Charlie Munger, right-hand man to Warren Buffett. All right, first up in our news session, this isn't, hot off the press because this really has been leading up for several days now, but it is official. Twitter's board has decided to move forward with a lawsuit to sue Elon Musk over his failure to purchase the social network. This is kind of very interesting because Elon signed an agreement that was very much in favor of the sellers, in which he would pay $1 billion if he did not buy Twitter. I thought that was very interesting that he would sign that type of agreement, but it's probably what he had to do to get Twitter to move forward with the deal. So this is going to play out for several days. I know they're trying to expedite it. The actual in front of the judge, the actual case should be pretty quick, but it's just going to be sort of interesting to see how they play through this. So the Twitter lawsuit states that as the market and Tesla's stock price declined, Musk's advisors began to demand detailed information about Twitter's methods of calculating the MDAU, which is the monetizable daily average user and estimating the prevalence or false or spam accounts. So they want to know exactly how much each user is to be monetized. And the way that they did this, or how he was trying to find this, was they opened up a fire hose, which is where he basically gets like unlimited data. And the lawsuit does argue that Twitter provided all the data requested by Musk, having provided his lawyers with as much as 49 terabytes of data, which is truly an enormous amount of data. Okay, moving on to Binance. They did their quarterly burn. Love this. Every quarter. This quarter was $444 million was purchased in BNB and then burned. I will support this article every quarter. Next article is coming from ARK. This is Kathy Woods. The SEC delays the decision on ARK's 21 share spot Bitcoin ETF. This is really no surprise. I will actually be surprised if this goes through. They have delayed, I think it's 45 days, right? So they're delaying the decision, the SEC, up until August 30th, at which point I'm sure we will have a news article saying that it was declined. The SEC has not really moved on this. They do not want a spot Bitcoin ETF, which I think is weird because they did approve other types of ETFs, like you can short Bitcoin in an ETF. What a spot Bitcoin ETF is allowing people to do is become exposed to Bitcoin without having to open up a Binance account or some other sort of like crypto exchange account. So through their through, like, let's say the New York Stock Exchange, they would be able to put money into a fund with other people, and that fund would purchase the Bitcoin on spot. I believe it's that we should have a spot ETF for Bitcoin. It will absolutely open up a lot more people and expose more people to Bitcoin without having them, like I said, to have to open up another account. There are a lot of people out there that don't even want to learn how to open up a crypto account. That's not really in their wheelhouse, and so that's a solution: the spot Bitcoin ETF. Okay, moving into this guy, Charlie Munger. Buying crypto is worthless. In a recent interview, Berkshire Hathaway Vice Chairman Charlie Munger slammed cryptocurrencies as worthless and dangerous, urging investors to avoid them entirely. He compared the crypto industry to a dirty cesspool, saying that it is full of scams and fraud. He advised people to steer clear of cryptocurrencies, warning them that they could lose all their money if they invest into them. Look, crypto does have a lot of scams, but I looked into Berkshire Hathaway to see what they're involved with. Okay, and this data is coming from Sion.io. Berkshire Hathaway's investments, the top five in relation to the top five industries with fraud, which are mining, real estate, telecommunications, entertainment, and financial services. When looking at Berkshire Hathaway's investments, and I went through and I divided them, like I listed them all out into an Excel spreadsheet, sorry, and I separated them by sector. When I did this, I found that they are heavily invested in the top five industries that are plagued with fraud. Mining, number one, right? They're invested 32.56 billion in mining. They're invested 389 million into real estate, 5.39 billion into telecommunications, 7.39 billion into entertainment, and 69.73 billion into financial services. Top five industries with fraud. They're invested $115 billion. Close enough to say $115.5 billion into the top five most fraudulent industries. That is 35.59% of Berkshire Hathaway's entire investment portfolio is invested into the top five most fraudulent industries. So, Charlie, I got to be honest, man, I don't even know what you are talking about when talking about crypto. It's just a new technology. This happened with the internet. This happens all the time. Fraud is always going to be there. It's up to the leaders in the industry to help us create a safer framework. So let's talk about that, because honestly, I don't, Charlie, I don't disagree with you, right? At all. There is a lot of bad shit going on in crypto, but it's not crazy worse than anything else. It's just people. They suck. They're out for themselves. They're looking for that opportunity. The solution isn't to point fingers and say, no, your industry is bad. I don't understand it. So therefore, everyone in it is bad. And I'm going to convince everyone to go away from it. The solution is to get involved, it's to be a part of the conversation. So, Charlie, get involved or shut up, because blockchain isn't another technology. It's not going to be a short term fad. Blockchain is the pathway to operating a more transparent world so that the fraud that you're scared of doesn't happen as often, or hopefully even at all. This conversation isn't really even about crypto or blockchain and making the technology itself better. The conversation should be about creating a framework to make it safe. So if you want to leave this world, Charlie, better than when you came into it, use your power, use your influence, start the conversation, lead that conversation. Ask yourself, how can I contribute to creating a safer framework for decentralized finance, or just a more transparent way of transacting that's open to the public? I'm serious. This isn't about making the technology better. That will happen with competition. This is about creating a framework that we can all agree to work within. Decentralized, open, free. Three words that scare the world of centralized businesses that do not operate that way, but they beg us for our money. That's it for Across the Chain this week. Next week, we're diving into real estate, the corruption, the greed, and maybe some of our solutions. Have a great night.